Welcome to the show. I'm Andy Hagans, and I'm super excited about our program today. Honestly, since I've started this podcast, the Alternative Investment Podcast, I've been thinking about doing this episode from the beginning, and we are over episode 150 now. I wanted to talk about donor advised funds because our audience here on the show is high net worth individuals, family offices, and financial advisors. And in this demographic of investors, I think that this product, this vehicle, just holds enormous value. And in my opinion, everyone should know about them. They should know that they exist, how to use them, how to set one up, and so on and so forth. So I'm very excited that joining me today is Jodi Rosen, who is Chief Development Officer at Vanguard Charitable. Jodi, welcome to the show.
Thank you, Andy. It's my pleasure to be here. Thank you so much for having us.
And I could have reached out to a lot of different organizations because there are different administrators of donor advised funds, but I really wanted Vanguard Charitable to come on this show. So it wasn't just that I wanted a donor advised fund manager. I wanted specifically Vanguard Charitable. So I'm really excited to dive in. And Jodi, we were talking, I want to disclose to the audience, and I do this also with investments, that I'm a Vanguard Charitable user. I'm a Vanguard investor. I'm a super fan, so I'm not gonna like hide my biases and pretend to be neutral or anything. That's not the case. I love Vanguard Charitable. But before we dive in to Vanguard Charitable, I want to step back. I know a lot of our listeners and viewers will know what donor advised funds are, but not everybody does. So, Jodi, could we just start there? And what is a donor advised fund?
Yeah, it's a great question. And one that I get often working in the donor advised fund industry. So, in its most simplest terms, a donor advised fund is a charitable investment account. It allows an individual to put money into that account in the form of a charitable contribution. The money is then invested to hopefully grow over time. And when the donor is ready to make a grant, they make a grant recommendation at any time, today or sometime in the future. Now, there are a lot of benefits to using a donor advised fund, but I'm wondering, Andy, if it might be helpful to go even one step deeper to describe how the donor advised fund works. That be helpful?
Absolutely, because I think when people hear a charitable investment account, it's like, well, what does that mean? And is it the same thing as a foundation? Is it different? What is it? So by all means, please, and I know that you have to explain this to people multiple times per week. So, yeah, give us the spiel. How does it work?
Great. So, a donor advised fund or a donor advised account is managed by a sponsoring organization that is a 501c3 public charity. So, no different than the American Red Cross or even maybe your soup kitchen down the street. We're public charities. And why that's important is because when an individual makes a contribution to create or add to their donor advised fund, they are making a charitable contribution to a public charity. And so they can contribute cash or appreciated securities. They can contribute private equity or real estate or art or interest in a hedge fund to create kind of charitable capital out of those illiquid assets. And when they are received, that individual gets a tax deduction, maximum tax deduction allowed by law when giving to a public charity. The assets are then invested and will grow tax-free over time. So you're creating more charitable capital in your donor advised account. And then when you're ready to make a grant, you submit a grant recommendation to that sponsoring organization, in this case, Vanguard Charitable. We're going to make sure that that grant meets all guidelines that the IRS puts out, or if you're making a grant to an international charity, we want to make sure that we're following those compliance guidelines. We send the grant out the door. So in essence, it breaks apart the tax implication from the charitable impact that you seek to make, and it allows you to increase your opportunity to give to charities over time.
Which is awesome. I mean, for so many reasons, I think a lot of people, when they think about charitable giving, it's like cash in, cash out. Like I bring in, come in, and I tithe, I give 10% of it, to charity or whatever percent, but it's always inflow, outflow, as opposed to, like a Harvard endowment fund or Yale endowment fund, or as opposed to the Gates Foundation or the Buffett Foundation that have millions or billions of dollars. They can invest them and they can, make an impact on the world just from earnings from that capital that's invested. But typically, 50, 100 years ago, that was a mindset of charitable giving that you really only had at a certain scale, right? Like if you were a billionaire essentially, or at least a multi-millionaire. And so, that at least was my initial kind of aha moment about donor advised funds. Like, oh wow, you can invest money. You donate it up front and you take that tax deduction up front, but then it's invested and it's going to throw off income. I mean, almost in perpetuity, or maybe there's some details there or restrictions, but over a very long period of time, it's going to generate returns. So to me, kind of a cool aspect is it makes giving fun in the sense that it stretches it out over time, or you can, let's say you make a capital gain and you want to invest it, and then you can commit to supporting a cause for the next 10, 20 years and know, like, I'm going to have investment income to support you over time.
You got it. You got it. That's one of the great benefits of a donor advised fund, right? It allows you to create that long term giving plan, whether that's because you have the opportunity to give year over year or because you've had one liquidity event. You know that that's the one liquidity event that will give you that charitable capital. And then you can give year after year while increasing the amount of money that you have in that account over time, and creating that long-term legacy, whether that's how you engage the next generation in the charitable planning, or ensuring that you can give to those organizations long after you're no longer here.
Absolutely. And that kind of, impact is really about legacy. A lot of investors in our audience, high net worth investors, especially family offices, I mean, that's really top of mind, is legacy. And so donor advised funds, to me, the beautiful thing is how efficient they are. I mean, they're cost efficient, they're time efficient, they're legally efficient. And so they take away, like if you were a high net worth individual or a family office and you were to start a foundation, I'm not saying that's the right thing to do, the wrong thing to do, a good thing to do, or a bad thing to do, but there's a lot of overhead and time that you have to commit just to the administrative aspects of that.
Mm-hmm.
And so in my mind, what the donor advised fund can potentially do is it can take a lot of those administrative aspects off your plate.
Yep.
You can essentially write the check and then recommend the grants. And that's really the fun part, right?
Absolutely. And, when you think about some of the benefits of a donor advised fund, I tend to think about it in terms of fives, right? So absolutely efficiency, tax efficiency we talked about in terms of contributions in, and the ability to tax manage the investments while they're there. Cost, you mentioned, and we can talk a little bit about what some of the differences in cost might look like between a private foundation and a donor advised fund, but absolutely you get the benefit of a low cost vehicle. Vanguard Charitable is, is known as being the lowest all-in cost, of course, but by and large, donor advised funds are much less expensive to manage than a private foundation. You have the opportunity to remain anonymous, which is really important to many high net worth and ultra high net worth individuals and how they manage their philanthropic efforts. You help to manage complexity, whether that's on the contributions in or the grant making out, right? So and of course, legacy planning, which we talked about. So lots of different benefits to using a charitable vehicle, and particularly a donor advised fund.
Yeah, and I want to drill into that differences between private foundations and donor advised funds in a second. But I just wanted to reiterate, and Jodi, you alluded to this already. I'm an entrepreneur. I've had 4 different major liquidity events of businesses that I've scaled and sold. And I also know a lot of other entrepreneurs that have had significant liquidity events. And I actually think that this is a challenge for a lot of people, whether they're entrepreneurs or maybe they work for a startup that has an IPO, where there will be a liquidity event and it's almost like the tail will wag the dog in the sense that they know, they'll know like I want to give X% of this liquidity event or this portion to charitable causes. But now I'm on a deadline, right? Because I have to do it by whatever the tax deadline is. And in my experience, when you're in a rush on a lot of things, sometimes it's hard to make a decision. And I've known, I mean, I'm thinking of a specific person. I don't want to, reveal who they are, any of the specifics, but he basically told me he gave away a very significant amount of money. And he told me years later, going back, I would have done that differently.
Yeah.
Knowing what I know now, and I'm a more experienced giver. And so that actually has informed me and some other people, him sharing that with us, because then we've realized, well, you can take a tax deduction up front if you put it in a donor advised fund, even if you want to give 100% of that money away the following year to a single cause,
Mm-hmm.
you can still do that, right? So it just preserves all of that optionality.
For sure. And I think that the piece that entrepreneurs and founders in particular don't take into account enough is that they're often working with a zero cost basis. And when you make that contribution in, not only do you get the fair market value deduction, but you avoid paying those capital gains on that asset. And so if you're a founder and you have a zero cost basis, that could be pretty significant. And so if you transfer that asset in kind, you really do kind of get that double benefit.
Well, now you're speaking my language. That's a benefit I didn't even realize. So
Yeah.
these are very tax advantaged vehicles. And we're talking about legacy. So Jodi, maybe you could walk me through this. I know that when you start a donor advised fund, so there are some legal things to be aware of. It's not like anything goes, right? Like obviously this is a tightly regulated space and it needs to be, right? Because we don't want there, we can't have any fraud going on in the charity space with nonprofit organizations. So this is tightly regulated. There's I don't want to say there's a lot of rules, but there are important rules and guardrails to be aware of. So when you donate the money to the 501c3, like a Vanguard Charitable or Schwab or Fidelity or whoever is administering the donor advised fund, you take that tax deduction and you become the advisor to that donor advised fund, right? But you don't actually own it anymore, right? Like the funds are gone. You've donated them.
Mm-hmm.
So you're now an advisor and you're recommending grants. You're not necessarily making the grants. Is that kind of a fair way to qualify
it's
it?
absolutely accurate. And so that loss of ownership is what gets you that tax deduction, right? You've given up ownership and control of those assets. Now, as a donor advised fund sponsor, whether it's Vanguard Charitable or any other donor advised fund sponsor, we have a mission to help support our donors make the most impact with their philanthropy. And so our role in this is to ensure that we are supporting that individual in their philanthropic efforts and maintaining full compliance over all the grants that are going out the door. So you're absolutely right. The charitable space is highly regulated, and we are also self-regulated to be sure that we're exceeding those legislative guidelines. We're going above and beyond. We want to protect the donor and we want to protect the nonprofit. And so we do a level of due diligence on every grant that goes out the door to make sure that they're meeting those IRS guidelines.
Right. And, like to make an example, I can't start up a charity and pay myself whatever through that charity and then donate to a donor advised fund and then have that recommend a grant. That's the kind of stuff that, it's kind of gross. It's kind of incestuous. Like I'm personally speaking, I'm glad that it's regulated the way it is. And I'm glad that Vanguard Charitable, as you mentioned, self-regulates. But, that kind of brings me to comparing this to a private foundation, because my impression is with a private foundation, you do potentially have a little bit, maybe more control depending on how it's legally structured,
Yep.
um, as the donor to the foundation. But then there's also a lot of complexity and a lot of,
Yeah.
there's cost associated with that. Is
Yeah.
that right?
Absolutely. So private foundations and donor advised funds, both charitable vehicles, right? That's what they are. And actually, there's a place for both in the philanthropic landscape. Um, they both have the opportunity to grow charitable capital, engage the next generation, help the individual think about their long-term giving plan, right? So that they are very similar in a lot of ways, but as you intimated, there also are quite a few differences. So private foundations, as you mentioned, can be quite costly. And that cost tends to be driven by the need to hire an administrator. Maybe you have someone to help you with your due diligence for grant making. You might have a CPA to file your 990 PF. You might hire an attorney to create the structure. You oftentimes have a governance board to make sure that you are operating above board and you have all your governance components in place. You have the opportunity to create a bespoke investment model using any sorts of investments that you might choose. But you, as you indicated, you do have some level of control, and therefore your tax deduction on contributions in are not as beneficial as they would be going to a public charity. I think the final thing that I'll say is that despite the name private foundation, they are really anything but. They are not private. Anyone can go to GuideStar Candid, look up a 990 PF, and get all the information about that particular private foundation, whether that's who's associated with it, where your grants are going to, how your investments are allocated. All of that is public. So that is something to be aware of when you think about some of the differences between the two. By contrast, a donor advised fund, we talked at length about the tax deduction component. We talked about how the donor advised fund sponsor manages all the compliance and due diligence around your grant making. We talked about how they tend to be more cost efficient and the ability to kind of capitalize on that higher tax deduction because it's a separate entity.
Mm-hmm.
But they do hold anonymity. Because you've given up ownership and control of those assets, they are owned by the sponsoring organization, and disclosure about the individual account is maintained private. So on any grant that you give out, you can decide, oh, I want this organization to know who I am. Maybe I just want them to know the name of my fund, or I want to be completely anonymous. And so you control who knows what about your philanthropic effort. The one other thing I want to add is that no one vehicle is exclusive among another. And so it's not uncommon for us, particularly in the ultra high net worth space, to see individuals use both a private foundation and a donor advised fund. And there are lots of reasons that someone might choose to do that. We can talk through that if you think that would be helpful for your listeners. But they're vehicles that essentially help you to manage your philanthropic assets in different ways.
Well, I mean, you begged the question, Jodi. So I have to ask you, if I'm a family office, if I'm an ultra high net worth, why would I want both? What would be the strengths of the one vehicle versus the other to where I would want to use both vehicles?
Yeah. So what we see generally is, and I'm happy to give you an example of something that happened recently, but we see it time and time again. When the matriarch and patriarch, maybe 3 or 4 generations up, they created a private foundation. And over time, it can get quite large, as you might imagine. And when we get to that kind of grandchild or great grandchild generation, as you might imagine, the values start to shift from what the original mission of that foundation was. And so families have different options, right? They can kind of force everyone to work together, find agreement, and continue to grant out of the private foundation. Or they can take the assets from the private foundation and make a grant to a donor advised fund and allow that next generation to to make grants as they see fit according to their own personal values. And we see that a lot as kind of individuals are beginning to think more and more about that intergenerational transfer of wealth. We do see the two working together. We also see that come into play when people are looking to make off-mission grants, right? We talked about the fact that private foundations are fully disclosed where they're making their grants, but from time to time, they may want to make grants to organizations that they don't want to make public. And so then they might leverage a donor advised fund to help support that as well.
Understood. And I think you hit on something really important, which was, maintaining wealth over generations. That's a huge question, challenge, opportunity for family offices, for ultra high net worth, very high net worth. And then also just that concept of legacy, which I think is huge in the charitable world, right? So when we're talking about family offices, we're talking about, their investments and their actual family office, but also as you alluded to, their foundations, the ways that they want to make an impact on the world and their legacy. So here's a practical question. Let's say I have a donor advised fund with Vanguard Charitable. Maybe I'm married, and my wife and I are the account advisors. Mm-hmm. We both pass away, but because the account has been recommending grants all these years, but because the investments have performed so well, the capital in the fund is actually higher than it ever has been.
Yep.
So what happens? Does it get absorbed by Vanguard Charitable into some sort of general fund, or do we designate the next generation of account advisors, or what happens then when we pass away?
It's a great question. The answer is it's up to you. So when you create the fund, or at any time during the lifetime of the fund, you can make adjustments to this. You create a succession plan. And absolutely, we have this at Vanguard Charitable, but across the donor advised fund industry, I would expect that every sponsor would have a succession plan, which essentially allows you, I would say at Vanguard Charitable, to name your children or some other individuals as successor advisors. You can split the account. So maybe you have 2 children and you want each child to have their own account. Maybe you want to distribute it all to named charities and close out the account. Or we have an endowed grant plan, which says, I want these charities to continue to get supported at this percentage for the lifetime of the fund. The last option would be to go into a fund advised by our board. But candidly, that is a less popular option.
Right. I mean, and it's such it's funny. You could take this back to ancient Egypt or even before, just this human desire for legacy, right? It's why the pyramids were built. And I think Vanguard Charitable Donor Advised Funds, it's a 2023 version of that in a way, in the sense that if let's say you're passionate about animals or, no-kill animal shelters, well, you can literally set up a fund and to your point, you can fund that cause, not only cash in, cash out this year, but potentially in perpetuity or for a very long period of time. One last note about private foundations, and full disclosure, I'm not an expert at all on private foundations, but they have fixed costs in the sense that you're not going to set up a private foundation, without hiring an attorney, right? And doing those sort of annual tax returns, and just there are fixed costs such that, below a certain amount of capital, it is just not cost effective to set up a private foundation, right? And that I don't know exactly what that floor is in 2023. It probably changes, depends on what type of foundation we're talking about, but it's high. Like it's quite high to, hit that. And then there's going to be a lot of family offices or high net worth individuals who are maybe on that in the gray area where, well, we could do that. It's an option, but the fixed costs are going to eat into, it's going to be an operating expense that's going to potentially eat into our capital. Mm-hmm. Shifting to Vanguard Charitable, and we alluded to the efficiency, but I want to underscore to our listeners, and maybe I can say, Jodi, I imagine that you'd be more measured. So I'm going to go out and say my own opinion. The efficiency is amazing. I mean, I don't want to compare y'all to Costco, but I think I'm going to do it because like I'll get emails from Vanguard. This is it's such a different culture. I'll get an email like once a year from Vanguard Charitable. It's like, just so you know, we've cut the fees
Right.
on this fund. And it's like, what? Like you're used to getting a letter from the bank that says we've updated our terms of service, and then there's going to be a bunch of hidden fees or something in the fine print. And the fees are really quite low.
Right.
And when you think about, for a lot of foundations, their goal is to, give away 5, 6, 7%, whatever percent is of their capital every year. And with Vanguard Charitable, if a lot of people are doing that, if they're giving away, let's say 5 or 6%, given the low cost structure, given the fact that the stock market in America tends to perform pretty well, I think a lot of donor advised funds are finding like, wow, these are so efficient that we're managing to grow the amount in our fund while still giving away 5 or 6% a year.
It's remarkable, right? It doesn't feel real. We have a mission, right? Our mission is to increase philanthropy and maximize its impact over time. We believe that cost is a key tenet to ensuring that we can fulfill that mission. So you're right. We are constantly looking for ways to ensure that we are providing the lowest cost all in for the service that we're providing. And by the way, we continue to up our game with our products and services. So it's not that we are very thoughtful about how to manage cost and value. We think both have a place. You're absolutely right about thinking about cost when thinking about a threshold for creating the private foundation. But I think it's important to also acknowledge on the flip side of that, there is no ceiling for when to think about a private foundation and a donor advised fund, because and you and I were talking before the show that used to kind of be the mentality that if you had more than, let's call it $10 million in 1990, you were setting up a private foundation. But that's just not what it is today, because the complexity around the assets that we accept and how we can distribute those assets in the form of grants have really gotten quite remarkable, that we're able to support whatever that charitable purpose is in a way that donor advised funds hadn't been able to do in the past. And so we work with individuals who are contributing with many, many zeros after that first number, and there is no ceiling.
Well, I know we're not going to talk about individual accounts or anything like that, but my next question was actually going to be around the account minimum, just the practicality. So I'd actually like to ask about the range, like even in ballpark, what is the largest donor advised fund that, maybe around this era that you might have at Vanguard Charitable? And also, what's the floor that's a really important question, is what's the floor? How much capital do I need to start one of these?
Sure. So, we talked about Vanguard Charitable, but there are thousands of donor advised funds that exist across the country, and there is a donor advised fund for everyone. And so when we talk about the floor, there are donor advised funds that have a zero entry fee. And for some people, that is the right thing to, that suits their philanthropic efforts. At Vanguard Charitable, our minimum is $25,000. We think that allows you to think long-term and strategic about your charitable efforts and give those funds a real opportunity to grow so that you can give today and in the future. Now, when we talk about kind of what that ceiling looks like, it can be hundreds of millions, billions of dollars.
That's what I wanted, Jodi. I was like wondering, what are we talking? 100 million, a billion? Okay, so we're talking numbers that are rivaling, exceeding many private foundation numbers for all of the reasons that you've mentioned.
Yes. And I will say that over the last 2 years, we have seen an increased trend of private foundations converting to donor advised funds.
Wow.
Just retiring out of the private foundation structure. And that doesn't mean that they're doing their philanthropic planning any differently. It's just in a different vehicle because they are looking to reduce costs, and donor advised funds are a great way to do that, so they can give more over time.
Yeah, I also have to say, it allows the investor to take liability off their plate. I mean, because again, the private foundations, you've heard kind of horror stories, and I know the vast majority of them are wonderful organizations with wonderful people doing things by the book, but you do kind of hear there are minefields there.
Yeah.
And I guess how I feel with a donor advised fund is I'm outsourcing that headache. I'm going to call it a headache because that's what the liability is, from my standpoint.
Right.
I don't have to worry about it. I'm going to trust Vanguard Charitable or maybe Schwab or Fidelity or any of these other organizations that offer them. Going to let them worry about the red tape and the compliance.
Mm-hmm.
And I'm going to do the fun part,
Right. And 9 times out of 10, people don't know that they've stepped into a landmine, right? Like it's not intentional, but that's why you need experts to help you with your due diligence, whether you're making a domestic grant, and particularly if you're doing international granting, because that is a whole nother ball of wax. And you need real expertise in order to manage that effectively and within the confines of the law.
Absolutely. Well, let's get practical for a minute. I'm going to presume we have at least one listener out there who's like, wow, this is great. Maybe I already knew about these, but I'm ready. I want to set one up. I'm sold. And let's even say, you know what? I'd like to go with Vanguard Charitable. I want to do a $25,000, contribution and set up a donor advised fund. What's step one?
Go to vanguardcharitable.org. Vanguardcharitable.org has all of our tools and resources to do any additional research, but it also gives you the opportunity to open your account right there. And so you go through a 10-minute flow where they're asking you very basic information. And at the end, it will ask you to fund now or fund later. And so once your account is opened, then you can choose what you want to give, how much you want to give, and enter that contribution right online.
And obviously we've talked about this already, but the cool feature here is when you set this up, you can kind of divide and conquer. You don't have to know what organizations that you're going to recommend grants to. You can almost just sort of put that in your calendar, or if you know what, that's going to be something fun that I do. And just a lot of people do it in December, right, for holiday giving. But you can sort of say, I'm not going to worry about that today. Today, I'm going to set up the account. I'm going to take the tax deduction. And so you'll get that, tax receipt from Vanguard Charitable or whatever organization you set up the donor advised fund. You can take that entire deduction in the year that you make the donation. Now, I will say you may be making a grant 10 years later or recommending a grant to a charity that then sends you a receipt, because the charity, they don't always totally understand how donor advised funds, so they may do that mistakenly.
More educated, I will say.
Yes, you don't get to deduct it at that time. So you take it all up front. So okay. So I've gone through the 10-minute flow. Back to this process. It's about a 10-minute process. I've gone to Vanguard Charitable. Either I decide I'm going to fund it now, with a electronic wire or however I do that, or mail in a check, or I fund it later. What happens then, let's say my check clears. So a week later, account balance, $25,000. How do I start making grants? Let's say I'm ready to go. I'm like, I want to make my first grant. What do I do?
I love this. We're just really digging into the details here. So when you sign up for your account, you're going to get a login, much like you would with any other financial institution. You get a login and it takes you to what we call our donor portal. Once you're on your donor portal, you will have the opportunity to see the contribution that you've made. If you're giving appreciated securities, you can track the settlement into the account, select your investment allocation. And then when you're ready to make a grant, you'll see there's a little tab there that tells you to grant, and you recommend the grant online. Depending on whether or not it's been previously vetted or not, it should take about 1 to 3 days for that grant to go out the door and get to the charity. So, you talked a little bit. You talked a little bit about getting that tax receipt from the organization. I think one of the great things about a donor advised fund is it keeps your entire granting history in that donor portal, right? So you can go back, you can see, oh, how much did I give last year? I want to up that. Maybe you want to create a recurring grant every December. You want this grant to go out the door to this charity. So it gives you lots and lots of flexibility in how you manage your philanthropic account.
And to your point, because of these guardrails, because of the due diligence, if it's a larger charity, if it's the Red Cross or something, they've already had, due diligence done on these larger organizations, because obviously hundreds or thousands of donors are recommending grants, or advisors, I should say, are recommending grants to these organizations. So that will probably be processed very, very quickly. If it's a brand new charity, legal charity, then Vanguard Charitable or whatever the administrator, they'll need to do that due diligence, but it'll get followed up on. It will get processed. They'll get the check in the mail. And it honestly, it's that easy. It almost sounds too easy, but again, my experience talking with others, we do sort of outsource the headache to you all, and you specialize in it, and so it kind of leaves the account advisor to do that fun stuff.
Yeah, I will say something fairly exciting that recently happened with Vanguard Charitable is we engaged in a partnership with PayPal. And so you talk about checks being sent in the mail. We're actually engaged in a partnership with PayPal where the grant gets there instantaneously with those organizations that have signed up to be part of that program. So we're looking to get the money out the door as quickly as possible because we are advocates for the donors and we are advocates for the nonprofit community. We don't think that one can exist without the other. And so we're constantly thinking about how we support both.
I love it. And one thing I love about Vanguard and Vanguard Charitable is, you all do work with smaller investors. In my mind, at least, you kind of stand up for, serve the little guy in a lot of ways, but you also have the scale to cost efficiently help ultra high net worth family offices. So, do you have any milestones that, like how long has Vanguard Charitable been around? Could you give us a sense of how it's grown alongside the normal Vanguard organization?
Sure. So Vanguard Charitable was established 25 years ago. We actually just had a pretty big milestone in December. We celebrated our 25th anniversary. And we touched on this, but I think it may be important for your listeners to understand that Vanguard Charitable was founded by the Vanguard Group. We carry the brand and all that Vanguard stands for, but we are an independent entity. And so we were founded 25 years ago by Vanguard. We also hit another pretty amazing milestone in December, and that was that we sent out $15 billion in grants to charities across the United States and around the globe. Now, that's remarkable, but since December, we've granted another $1 billion. And so it's just amazing to see the velocity in which the grant making continues to pick up, and how generous our donors are. And I think that's for a couple of reasons, right? I mean, first of all, donor advised funds are countercyclical. When we see uncertainty in the market, when we see inflation, when we see human or man-made disasters, our donors step in to fill that void. And we've seen a lot of that, right? And so our donors are continuing to access that charitable capital that has been set aside specifically for this purpose. And they're making grants at an amazing rate. It's really fabulous to see. But as you mentioned, we begin to we're getting more popular. And so there's more opportunity for charitable capital to come in, and our donors are just very, very generous. So it's amazing.
So wow, so essentially $1 billion in grants so far in the last 7 or 8 months.
Yeah.
That's incredible. And the thing is, people I think sometimes in the nonprofit world, if I could opine for a minute, sometimes they think of the financial world or the markets as the bad guy, as the enemy, as big
Yeah.
evil capitalists or whatever. But in my mind, I'm like, well, even if you believe that, Vanguard Charitable is using the market to the advantage of all of these nonprofits, because I'm thinking, in the past 10, 20, 30 years, there's been ups and downs, but the markets, especially the US stock market, has had an incredible bull run.
Mm-hmm.
Right. And so if you have a donor advised fund and any of the typical, Vanguard index funds, balanced fund, moderate, aggressive, whatever strategy, it's very likely that if you just don't even think about your donor advised fund for a year or two or whatever, and you log in, you're going to be like, oh, wow, that's really grown. So it's cool that, if you think about your donor base as the market, as there's a bull market, whether it's real estate or tech or just the stock market, they're going to have more money to donate to charities, to their donor advised funds. But also inside Vanguard Charitable, that bull run is very, very exciting, right? Because it makes everyone's account bigger and they can recommend bigger grants.
I have to say that, so I've been here 12 years. I've been in the donor advised fund industry for over 20 years. And every time I look at an account that has granted out more than they contributed and
Mm-hmm.
still has a significant balance in their account, it blows my mind. I mean, the power of compound interest is just remarkable. We, by our very nature, we're a leaky bucket, right? We get contributions in
Right.
to support our growth, but we encourage that granting out. And the markets really help us to make sure that there is continuous charitable capital going out into the marketplace.
Yeah, it's just great that the nonprofit world leveraging the stock market. I honestly think it is as simple as that, because if you were, I think a lot of donors, account advisors, I should say, they're probably trying to recommend grants about 5%, 6%, or 7%, kind of modeling what a foundation or endowment would do. And
Mhm.
so if their account grows by more than that amount, they're going to grant that amount and still have more left over at the end of the year than they did at the beginning. Now, and I actually want to touch on that really quickly, because that's one. If I remember correctly, that is a guideline at Vanguard Charitable where you do need to make some grants, right? Like I can't just set up a donor advised fund and then never recommend a grant and have that investment account just grow in perpetuity. Is that right?
For sure. And so at Vanguard Charitable and just about every other donor advised fund that I know of, there is a minimum activity policy. We we are a charitable entity, and so we want to make sure that our donors are philanthropically inclined and they are making grants. And so we have a minimum activity policy that says you need to make at least one grant every 3 years. Seems reasonable, right? I mean, you may be saving up for a particular philanthropic effort, or you're trying to figure out what it is you want to support, or maybe you're just, highly motivated in your income earning years. You're not yet focused on your philanthropic efforts, and you might need a little bit of a nudge to say, oh yeah, got it. I need to make that grant. And so we help to support that, right? We want to make sure that our donors are making their grants out to the charities.
And my advice, to any families or high net worth, listening or interested in setting one of these up, is almost pretend like you're a foundation or an endowment. Come up with your own policy. You can design it yourself, but you don't need to reinvent the wheel. A lot of these endowments, are 6 or 7% is their goal to disperse that.
Mhm.
amount. And so, set that up, set up a recurring calendar invite, maybe every December, or maybe actually not every December, maybe do something counter cyclical there to give the team at Vanguard a break.
Oh,
um,
thank you, Andy.
everybody do it in what September, and I don't know what the counter cyclical months would be. Don't do it a week before Christmas though. But anyway, you can take those best practices, essentially model those within your donor advised fund, and just enjoy the process, because I do think it's a lot of fun. And Jodi, I have to say, I love what Vanguard Charitable is doing. I think you all add a lot of, you know, value to the world and to the industry. And I also think, something I would say about Vanguard itself and also Vanguard Charitable, anywhere you're operating, to me, it puts pressure on the other players, cost pressure, other types of pressure to like up their game. So I'm guessing, just like in the investment world, like to me, Fidelity is great, but I love that Fidelity and Vanguard are competing, because they put pressure on each other. And I think probably that's happening in the donor advised fund space. So there's a lot of good administrators out there. Um, and, and I think what y'all are doing, showing leadership in this space, is wonderful. So I can't thank you enough for coming on
Thank,
the show today.
thank you so much. Thanks, Andy.
Where can our audience go to learn more about Vanguard Chair? I think you already mentioned the website, but one more time if anybody missed it.
Sure. VanguardCharitable.org is where you'll learn a little bit more about Vanguard Charitable. You'll see some of our suite of offerings to help support that philanthropic effort, whether it's our nonprofit aid visualizer, which allows donors to kind of select charities in a particular interest area. Right now, we have hunger and homelessness up. Anyone can go on and they can leverage that. We have a podcast. We have a podcast.
Oh, wow.
Yeah, called The Value of Giving. We're going into our third season, so it's an amazing space to hear experts in the philanthropic space connect in with our leadership to kind of get a little bit more about what's happening in the philanthropic marketplace. And you can read a little bit about our most recent thought leadership piece, Why Giving Matters, where we find that individuals who have donor advised funds with Vanguard Charitable give more because they can give better. And so lots of tools and support for philanthropists, family offices, financial advisors, but that's where you can also go and open a Vanguard Charitable account. So we hope that your listeners will do that or seek out to learn a little bit more about how they can better their philanthropic efforts.
Absolutely. Remember, folks, 10-minute setup process. It's as easy as you could possibly imagine. I'll make sure to link to all of those resources that Jodi mentioned in our show notes, which are always available at wealthchannel.com. Jodi, thanks again for joining the show today.
Thank you so much, Andy. Really appreciate it.